Hello guys, in this video I'm going to be explaining what engineered liquidity is and how to trade it in the market. Stay to the end of the video. I'm going to be showing you the type of engineered liquidity we trade in the market and the type of pullback we trade in the market. That means way much of our time. Let's get right into the video. So guys, before you can know how to trade engineered liquidity very well, you must first understand market structure, BOS, change of character, and liquidity. If you are interested in learning both market structure, wake of structure, change of character, and liquidity, there's a video in the top right of your screen. So you guys go and watch the video to understand this liquidity trading pattern very well. And you must first understand the type of pullback also. Don't worry, by the end of this video I'm going to be showing you the type of pullback we have, and there's a video coming also. I'm going to fully explain the type of market pullback we have. So in order to trade this kind of trading pattern, the time frame that is profitable to trade this trading pattern, which is engineered liquidity, the time frame you must trade it on the 1 hour time frame above, 1 hour time frame, 4 hour time frame, daily time frame. But if you want to treat this liquidity trading pattern, if you want to trade it on the lower time frame, you can go below 30 minutes and 15 minutes, but nothing more. The only time frame you are allowed to trade this trading pattern, which is engineered liquidity trading pattern, is from the 1 hour time frame above. But if you want to trade it on the lower time frame, the only required time frame you are allowed to trade it is the 15 minutes and the 30 minutes time frame, nothing below that. Because if you are going to the 5-minute time frame, to the 3-minute time frame, to the 1-minute time frame, you get confused and it doesn't work on those type of time frame. The only profitable time frame you can trade is at the 1 hour, the 2 hour, the 3 hour, 4 hours, daily time frame, weekly time frame, like that. But if you want to go on the lower time frame, let's say you have seen a setup, you want to trade it as a confirmation entry, like this one I have here on BTC, like a confirmation entry. You can trade it on the 15 minutes or the 15 minutes, 30 minutes time frame. Those are the time frame you are allowed to trade this kind of trading pattern, which is engineered liquidity. This is the sell type of liquidity, engineered liquidity, which is what I'm trading right now on gold. But I'm going to show you the previous before of this trade. This is the before of this trade, and this is the after of this trade. Why did I trade? How did I know that gold is going to sell from this level? How did I know? Because it's part of my trading pattern. And if you want to learn how to trade gold profitably, there's a video in the top right of your screen, so you guys go and watch the way I trade gold profitably. That's my trading strategy, works very well on gold. And by the end of this video, I'm still going to share the trading pattern that I used to trade gold very well. Now back to the engineered liquidity. Now this is the sell pattern of this trading pattern, which is engineered liquidity, and this is the buy. This is the buy. Let me draw it very well for you guys. And this is the bullish version of this engineered liquidity trading pattern. And this is the buy form. So according to the way this pattern is structured, anytime you see it in the market, it forms only when market is in a bullish or bearish move. Market is trending. Let's say market is in a bullish trend right now. I'm giving you a quick. Let's say market is in a bullish move and market is trying to tap from this other block. You see market makers trying to trick new traders. They will engineer the liquidity into that level, tap the bullish, tap the other block, and start going. One thing to note also about this type of trading pattern, it only works for demand and supply. There are many type of demand and supply out there, but the main POI you must trade this type of trading pattern is order block, which is demand and your supply. Some traders will say this, let's say market is in a bullish trend market break high, they will say that market have broke the previous supply zone, then this is a demand zone, right? This is a demand zone. They are not wrong, but the way me I trading pattern profitably is by making sure that market tap your demand zone. This is your demand zone. The demand zone is like your order block. It's mainly for order blocks. It's mainly for order blocks. This type of trading pattern only works for order blocks, not breaker blocks. What is breaker block? Breaker block is whereby market break the previous supply zone, then tap into the previous supply zone or demand zone. This is a breaker block, and this is a breaker block, whereby market break the previous demand zone. This is also a breaker block. But this type of trading pattern only works for demand and supply zone, which is your order block, nothing more. If you are trying to use it for a breaker block, the accuracy of you using breaker block for this type of trading pattern is not profitable. It's not really profitable. The way I'm trading it right here using a breaker block is because it's an order block on my lower time frame. But in order to master this type of trading pattern, I suggest you should only trade it using order blocks. It can be your demand or supply. And again, there is one thing I want you guys to note also again. It's only, let's say market is in a bullish trend now. Let's say market in a bullish trend. And in order to identify this type of trading pattern, it's only, there are two type of pullbacks. We have the aggressive pullback and the corrective pullback. But this type of trading pattern only works for corrective pullback. Only corrective pullback. Many traders out there will be taking this trading pattern wrongly. That's because they have not understood the logic behind it. And this is what I'm telling you right now. The only type of pullback this trading pattern works for is only for corrective pullback. Like this demonstration right here, whereby market breaks structure. The market is creating a series of lower high, lower low, lower high, lower low, lower high, then tap into your order block, then start going bullish. This is for the bullish version. Now for the bearish version, it only works for corrective pullback. But don't worry, in my next video I'm going to be explaining more about type of pullbacks. It only works for corrective pullback, not aggressive pullback, like this demonstration right here. The way this is a pullback also, but this is the bullish version of a corrective pullback. This is a corrective pullback right here. Lower high, lower low, lower high, lower low, the market start going. But for the bearish, create a series of high, low, high, low, high, then market start going bearish. So it only works for one. These are the things to note right here if you want to trade this pattern profitably. First of all, you must be able to understand market structure very well. BOS, liquidity, change of character. You must be able to know the type of pullbacks that this trading pattern works for. It only works for corrective pullback. This right here, this is the demonstration of the corrective pullback, both bullish and bearish. Now, since you know about that, it only works for this corrective pullback, and it only works for corrective pullback, not aggressive pullback. Now, let's dive in. Let me give you more examples on this on the charts. Like I was saying, it's only for corrective pullback, and it only works for order blocks. Now let me show you an example. Like here on BTC, as you can see, this is a corrective pullback. Market break structure, retrace a little, then tap into this POI. This POI is on the 2-hour time frame. I traded this on the 2-hour time frame. Market break structure. That's why I said you must understand what break of structure means. Market break structure, we trace, give engineer liquidity, then tap into our POI, which is an order block. Remember, not a breaker block. Market tap into an order block, then starts going bullish. Also, right here, this is what I'm talking about. As you can see, corrective pullback. Corrective high, low, high, low, high, low, high. The market start going bearish. So this is for the bullish version and this is for the bearish version. So I'm going to explain more about pullbacks in my next video. Let me give you another example of how it looks like on the chart also. Look at this one right now. There's one thing I forgot to mention also. It works for confirmation entry. It works also for confirmation entry. Let me show you. There's one trade I took, I think last week on BTC. Yeah, this is it. This is the trade. This is the trade. As you can see on the higher time frame, this is the trade on the higher time frame. But let me give you guys some quick examples of how it is, of how it looks like in the market. This is an example of engineered liquidity I'm trading right now on gold. As you can see, break of structure, corrective pullback, market grab a pullback, market grab that liquidity, they start going bearish, which is this one right here. And another example on USD JPY. As you can see, we had a break of structure right here. Then market retraced. This is an example of engineered liquidity. Market retraced. Give me engineered liquidity, tap into my POI, then start going bullish. This is an example of engineered liquidity, the buy version. Now, also on this one again on BTC, break of structure, engineered liquidity, bullish. Break of structure, engineered liquidity, bearish. So you guys need to understand what break of structure means, liquidity, then type of pullbacks we know, the type of pullbacks we have in the market, and order blocks. Those are the 4 criteria you need to understand in order to trade this engineered liquidity profitably. And also the time frame you are allowed to trade this liquidity. This liquidity trading pattern is on the higher time frame, 1 hour time frame to daily time frame or weekly time frame. You can only trade it on the lower time frame, like the 15-minute and the 30-minute, just for confirmation entry. But it's not advisable to trade it on those time frame all the time, because market makers usually trade those kind of pattern on the higher time frame, like the 1 hour time frame upward. So I think with this little video, with this little explanation, I'm able to explain what engineered liquidity is and the criteria you need to know in order to trade it profitably in the market. So in my next video, I'm going to be explaining what pullback is and the type of pullback we have in the market. So if you guys have any question, I'll be in the comment section below answering your question. Bye for now.